Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Bersecci with your top stories. Software stocks sink. A new AI tool from Anthropic fuels disruption fears, wiping $285 billion from software, financial services, and asset management shares. Meanwhile, Bitcoin falls to its lowest level since Donald Trump's election win. UBS reports a fourth quarter profit beat and reveals plans to buy back $3 billion of its own shares. We'll bring you our interview with the CEO, Sergio Armati, later this morning. Plus, Novo Nordisk warns investors of a steep decline in sales of its blockbuster weight loss drugs. We'll hear from the CEO later this hour. And let's get you up to speed on these markets. We saw declines for Wall Street yesterday, a bit of a pullback for both the S&P and the Nasdaq. And this on back of Anthropic releasing a new AI tool specifically targeted at the legal industry. But it really sent down all of these software as a service stocks substantially lower. Some of those names down anything from 6 to 10%. Today, a bit of stabilization coming through. Nasdaq futures trading flat. Brent also in focus this morning, up 0.7%, just shy of $68. Keeping a close eye on the geopolitical developments in this part of the world, with the U.S. shooting down an Iranian drone. But negotiations are still going to happen this weekend, so keep an eye out on that. And then gold up 2.7%. We are back through $5,000 again. So buyers are coming back. Will it last? That's a question we're going to put throughout the course of this show. And in terms of what else to watch out for, we have a bunch of earnings that I'm going to bring you in just a moment. But at 10 a.m. UK, watch out for a euro area CPI, so watch out for that, in addition to the PMIs that also cross around that time, the final figures. We have 3 p.m. The ISM services coming through from the U.S. Remember, earlier in the week, we had a very strong ISM manufacturing print. This is the services print. Perhaps we might see a little dip there versus the last month. At least that's the expectations. And then big earnings coming up. Alphabet, of course, Qualcomm, ARM, all coming up later today. So could be big drivers for where the Nasdaq goes from here. And those are your risk events for today. So at the top of this show, quite a couple that I need to mention. First of all, Crédit Agricole, fourth quarter net income coming in at 1.03 billion versus estimates of 1.1 billion. So a bit of a miss versus estimates, marginally so. In terms of the individual units, though, French retail banking came in at net euro 150 million. That is down 18% year on year. The total net income figure that we just spoke about, we just spoke about 1.03. That is in line with the estimates. But in fact, the CIB revenue, so that's another part of the business, came in at 2.15 billion versus estimates of 2.14 billion. So in line with their CIB business. But the French retail banking business down 18% year on year. As for operating expenses, fourth quarter coming in at 4.1 billion versus estimates of 3.9 billion, so slightly higher on operating expenses. CET1 ratio at 11.8% versus estimates of 11.7%. So all that to think about. Over a one-year horizon, Crédit Agricole up 29%. We will be joined by the Crédit Agricole Deputy General Manager just after 7 a.m. UK time. But it is not just Crédit Agricole that is hit. We also just about 15 minutes ago had some results come through from UBS as well. So to bring you some of the headlines there, the major one is that UBS have announced that they're going to be buying back $3 billion in their own share in 2026. They aim to do more. So that is on shareholder return. No doubt positive for shareholders there to hear. As for the numbers, again, we got a beat in terms of pre-tax profit. It came in at 1.7 billion for the fourth quarter versus estimates of 1.46 billion. And in terms of the individual compositions, so we've got wealth management pre-tax income at 1.29 billion versus estimates of 1.34. A bit of a miss there, but asset management also 212 million versus estimates of 221. And just to give you the total number around global wealth management net new assets, that came in at 8.5 billion versus estimates of 27.4 billion. So a bit of a miss on the net new assets. We will be bringing you an interview with the UBS Group CEO Sergio Armati at 7 a.m. UK time after this show is done. Now, back to a major story for markets overnight. A new AI automation tool from Anthropic has sparked a $285 billion, that is $1 billion sell-off in stocks. Traders are dumping software shares on fears about the destruction AI could cause. For more, I'm joined by Matt Bloxham from Bloomberg Intelligence. Talk us through this new model that was released by Anthropic. Why did it cause so much disruption yesterday?
Yeah, hi, Jemana. Yeah, I mean, you could argue that Anthropic's having a bit of a DeepSeek moment, if you remember from a year or two back, really disrupting the AI market with these co-work tools. It started with the Claude code, which kind of helped coders to essentially develop their software quicker and in a more automated way. Then they kind of transformed that into kind of co-work, which applies across a whole broad range of productivity tools such as Excel. And now the latest twist in that is they brought out a specific automation tool for legal services, and that really disrupted a lot of the big kind of professional information service names yesterday, like RELX, for example. But I think that's just kind of sparking broader fears that companies like Anthropic that really focused on business productivity tools are really making traction. It's really going to accelerate the disruption in existing business models, and not just traditional non-tech business models, but also new AI models too. So that's really kind of spooked investors. And anything that's got the slightest hint of AI to do with it in terms of kind of software and services is kind of feeling the effects. And it wasn't just software names yesterday. We saw a big sell-off, for example, in advertising agencies that have been investing heavily in AI as the next evolution of their business models. But even they suffered despite the fact that Publicis reported good results.
And I wonder whether, as you say, this is one of those game-changer moments for software as a service. And you look at the divergence of performance of that basket versus other parts of the market. Has the long-term investment thesis into software as a service changed on back of this? Because quite clearly there's disruptive technology that's coming and really changing the investment thesis over a medium-term horizon.
Yeah, it is, and I think I guess it's really forcing investors to kind of question again that even the kind of the newer businesses like software now, for example, are kind of potentially at risk, and this is kind of perhaps a bigger and quicker disruption to how you develop these businesses, how quickly you can evolve the code, what the right platforms are to use. So yeah, I think people are perhaps going back to the drawing board a bit. It's a bit of a kind of sell now, ask questions later, kind of better to kind of retreat and take risk off and figure the future out before stepping back into the market.
Let's talk about some of the earnings that have come through as well. AMD shares fell on underwhelming sales forecasts. We have Alphabet reporting later. What are you watching out for?
Yeah, so if we start with AMD, actually they had a good print for the quarter. They reported maybe 6 or 7% above on sales, but the market's got lofty expectations for this stock in terms of coming up, kind of catching up on NVIDIA. And I think even though the kind of outlook was better, it just wasn't the big beat that people were looking for. I think if you look at Alphabet, the owner of Google, I think the big focus today is going to be on the CapEx number for 2026. We saw a week or so back that Meta almost doubled its capital spending plan for this coming year. And I think the market's going to be looking to see whether Google follows suit and really doubles down on investment in AI-based infrastructure to accelerate what they're doing with Gemini.
Matt Bloxham from Bloomberg Intelligence. Bloomberg LP, the parent of Bloomberg News, competes with the London Stock Exchange Group and Thomson Reuters in providing financial data and news. Bloomberg Law sells legal research tools and software. Okay, let's see how Asian markets are faring with Winnie Su in Hong Kong. Winnie, stocks there seem to be pairing some declines. We saw that big U.S. tech-led sell-off, but things seem to be stabilizing in Asia today.
Yeah, morning, Jemana. You can see that Asia is actually more resilient compared to what we saw in the U.S. overnight. And in fact, MSCI Asia here pairing earlier losses and now trading flat-ish with the support coming from the Kospi, which is up about 1.5%, coming after even that big surge yesterday that we saw. Yes, some of the software names here in Japan and in India taking a hit, but seems like the impact here is more just concentrated on the software names. And that's mainly because how we as a region is more exposed to some of the hardware and the AI names. Now, flip aboard and take a look at the Japanese market, because overall, we are seeing that the Nikkei 225 here down about 0.6%, dragged by disappointing earnings from the likes of Nintendo. Here, in fact, slumping about 11%, the most in 18 months, because they are seeing profits getting hit by U.S. tariffs and also surging prices from memory chips. That is also likely going to impact earnings coming from Sony tomorrow. Stocks now down about 4%. In terms of the Japanese yen weakening for a fourth session, and that is coming as investors position for a Takaichi win for the upcoming election this weekend. Flip the board and take a quick look at this rotation away from tech and into the so-called old economy stocks in Hong Kong. You can see that HS Tech here down about 9% over the past 6 months, and that's driven by the lag in the weakness in EV and also e-commerce platforms. Meanwhile, the stocks in financials and property sector up some 10% over the same amount of time, and that is helped by a more a brighter outlook when it comes to the Hong Kong property market. Back to you, Jemana.
Winnie, thank you so much. Winnie Su in Hong Kong. Now, almost $500 billion has been wiped off cryptocurrencies in less than a week as a sell-off led by Bitcoin accelerated. The largest cryptocurrency fell to its lowest level since President Trump won the last election. Bitcoin dropped as much as 7% to just under $73,000 on Tuesday in New York, its lowest since November 2024. It later paired some of those losses. I'm joined now by Bloomberg MLive cross-asset strategist Sven Ram. So we've been talking so much about gold. Maybe let's spend a moment a little bit talking about what people once called digital gold and Bitcoin, and the fact that it really has not fared well since President Trump stepped into office, and despite the fact that this is quite a crypto-friendly administration.
Absolutely. That begs the question, what exactly is Bitcoin and the crypto coin universe, right? As you said, it was touted as the digital gold, a store of wealth. And even a hedge against the debasement trade. But as Michael Berry calls it, it's now clear that it's a speculative asset. And, considering it's fallen 40%, it is kind of signaling huge inflation, hyperinflation, if that is indeed the case, which is not absolutely what's going on. But, the problem with Bitcoin and other crypto coins is if you gave all the Bitcoin in the world to you, what would you do with it? You're going to sell it to look for another buyer, but it has no intrinsic value in and of itself. And that is the problem. When it starts falling, nobody can point out to an intrinsic level and say this is where its support is. And that is a major problem for crypto coins.
Yeah. So looking for support, as we're seeing in this chart over there, but we're sitting around $76,000 now. Sven Ram, Bloomberg MLive cross-asset strategist. Well, it's a big day for European earnings, and we will be hearing from top executives from UBS, Carlsberg, Crédit Agricole, Santander, and Novo Nordisk. You don't want to miss any of those conversations. But first, we'll be discussing more on the AI tech sell-off and market reaction with Wisdom Tree's Anika Gupta. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Wall Street has been skeptical about software stocks for a while, but sentiment has gone from bearish to doomsday, with traders dumping shares across the industry on fears about the destruction to be wrought by artificial intelligence. Our next guest says under the surface, 2025 already showed rotation away from the Magnificent Seven. Anika Gupta, Director of Macroeconomic Research at investment company Wisdom Tree, joins me now. Let's start with the price action overnight, Anika, and the fact that we are seeing such a dramatic sell-off in some of these software stocks. How do you think that's going to affect the broader AI sector?
Yeah, we're seeing a bit of dispersion take place within the tech sector. We're starting to see across the Mag 7, the performance has been quite flat. You have half of the Mag 7 stocks, above, rising above performance, whereas the rest of the half are actually been weaker. And so overall, we're seeing the Mag 7 stocks quite flat. I think within the tech sector, there's a bit of dispersion taking place where investors are a bit more skeptical about some of the software related services that have been released recently linked to AI. And so what we're starting to see in the results is that investors are becoming more discerning. They're looking for, given the fact that now we're seeing capex intentions rise 60 to 80%, and they're rising off very high levels. We're now starting to see investors become a lot more discerning on whether that's being translated into high revenue figures, or we're starting to see higher return on investment. And I think that became quite evident for Meta, which guided towards much higher revenue growth versus Microsoft, which had a more muted expectation ahead. And you can see that playoff where Meta was rewarded by the market versus Microsoft, wasn't rewarded in such a strong manner.
Yeah. Yeah, and of course, Alphabet coming up later today. That was one of the big drivers of performance at Magnificent Seven last year. Do you expect the rally to broaden out beyond the realm of those handful of stocks this year? So move away from purely tech into other parts of the economy, other sectors as well, to participate in this rally?
Absolutely. I think we saw a glimpse of that take place in 2025. 2025 was one of the first years where we saw the outperformance of MSCI ex-US versus the rest of the world actually outperform to the highest level since 1993. And that already told us that rotation is underway, where the US's high valuation is being questioned by the market. And so that's allowing for a rotation outside the US into more value-oriented markets, such as Japan, such as Europe, and as well as some other lower value growth opportunities existing in China. So we've seen that take place, that is broadening out. And while that is happening, there are still opportunities within the tech sector. It's just that investors are a lot more discerning, and we're starting to see that dispersion take place within the tech sector as well.
Okay, interesting. And also this morning, we've had a bunch of earnings crossing from Europe, from the continent, still the beginning of the earnings season there. And I do wonder whether you think it's been several years now, the ECB have been on this easing cycle, seem to be stopping around 2%. Are we actually going to end up seeing a perhaps lagged response in terms of stimulus that arrives to the continent later this year, and also pair that up with some of the fiscal stimulus as well that's due from, say, the likes of Germany?
Well, we've had very optimistic numbers coming out of the Eurozone, and that's taken place despite the higher tariff threats for the Eurozone, which is an export-based economy. And I think that's quite promising. Just this week, we've had a stronger print on the euro area growth number, which shows the resilience of the Eurozone despite a stronger euro, despite the higher tariff threats. And clearly, what we are seeing is a bit more resilience from the consumer. The consumer has been saving for years and hasn't actually been spending. Now we're starting to see consumer confidence start to improve. And so we're seeing a rotation within Europe from more of an export-related story to now a domestic reflation story. So I don't think for now the ECB is lagging in their decision making. I think they have meaningfully reduced rates from close to 4% now to 2%, and that is now feeding into the market where we're seeing easing of liquidity conditions.
Yeah. So does this benefit cyclicals then? How are you going to play it in Europe if you think that we're going to see this effect in 2026?
Well, right now, what we're seeing within European equities is the small cap equities actually performing very strongly on the back of more resilience from the domestic market. And I think that has been a very important change. Last year, we saw the exporters rally and do a lot better. We saw even a dispersion within European stocks with a higher exposure to the US outperforming versus European stocks with a high exposure to China. That is also losing a bit of momentum, where we're now starting to see the European small cap stocks rallying a lot more. Another factor that has been leading and having a dominant role has been the value factor, with the banks now having a much more optimistic forecast, also benefiting from the consumer spending. Value-oriented sectors, are in pole position.
Annika, great to chat to you. Thank you so much for speaking to us. Annika Gupta, Director of Macroeconomic Research at WisdomTree. Well, coming up, Novo Nordisk warns of a steep dip in sales on an intensifying price war for obesity drugs. We'll hear from the CEO next. This is Bloomberg. U.S.-listed shares of Novo Nordisk plunged almost 15% after a surprise forecast for steep declines in sales. The maker of Ozempic and Wegovy warns revenue will fall this year by as much as 13%. Speaking to Bloomberg, CEO Mike Dordstar said price wars in the market were hitting sales following the U.S. government's push to cut drug prices.
We have spoken actually before, and I've been speaking to 2026 being a year of headwind when it comes to pricing. So there should not be too much surprise when we, of course, announce these numbers, because we have been very transparent with regards to the GLP-1 prices coming down in U.S. across pretty much all the channels. And, of course, this is where the headwind is. But we also have said that at the lower price, we're going to see a much higher volume uptake going forward across the whole world, and not least, of course, in the U.S. And the Wegovy launch is a testament to that. Today, after just 4 weeks of data, we have more than 170,000 people on the pill. This is the most efficacious pill that there is with GLP-1, 17% weight loss, and the customers and the patients out there are really welcoming an affordable pill, which is at the same time very effective. So I'm incredibly optimistic on the future with the market expanding.
I hear what you're saying, that, this was well telegraphed, or at least you had tried to. But you take a look at shares right now, the ADR is currently down about 14%. So traders taken a little bit off guard here. I am curious, that range, that forecast that annual sales will fall 5 to 13%. That's a pretty wide range. How confident are you that 13% could be the trough here?
Well, the range is typically how we use at the beginning of the year. Our midpoint is what we are aiming at, and the range is not any wider than it historically has been. Of course, I can understand that negative numbers are not good news to the market, but once again, this is something that we had anticipated, and the obesity market is quite dynamic. And the reason the range has its numbers on each end is because so many things can happen.
Now to some of the other top stories we're following this morning. Santander has announced a €5 billion share buyback after confirming it has agreed to buy Webster Financial for €12 billion. Spain's biggest lender reported better than expected fourth quarter net income, coming in at €3.76 billion. The results were brought forward after Santander announced it will pay a total consideration of $75 a share in cash and stock for Webster. And we'll be speaking to Santander Group Executive Chair this morning, just after 8 a.m. Bloomberg understands Anthropic is working on a deal to let some employees sell shares in the company at a valuation of at least $350 billion. The tender offer would allow Anthropic staffers to cash out some equity in one of the world's most richly valued artificial intelligence startups. And Supermicro shares gaining in after-hours trading. That's after the company gave a forecast for sales in the current quarter that signaled strong demand for its gear to run AI data centers. Revenue will be at least $12.3 billion in the period ending March 31st. And coming up, we'll be speaking with energy giant Equinor after the company posted a miss in fourth quarter adjusted operating income. And we'll also be hearing from Sven Schneider, CFO of Infineon, as the German chip maker also reports earnings this morning. Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Bersachi with your top stories today. Software stocks sink. A new AI tool from Anthropic fuels disruption fears, wiping $285 billion from software, financial services, and asset management shares. Meanwhile, Bitcoin falls to its lowest level since Donald Trump's election win. UBS reports a fourth quarter profit beat and reveals plans to buy back $3 billion of its own shares. We'll bring you our interview with the CEO, Sergio Motti, later this morning. Plus, Novo Nordisk warns investors of a steep decline in sales of its blockbuster weight loss drugs. We'll hear from the CEO later this hour. Let's get a check on market because we did see a global rout yesterday, particularly led by the tech space, and Nasdaq ending the day almost down 2% on back of this new disruption, a new model being released by Anthropic AI, specifically targeted at the legal industry. But what it has meant is that some of the existing software as a service providers now have competition in that space. But this morning, you can see futures are stabilizing. S&P futures up 0.1%. Eyes looking ahead to earnings coming up later today. We've got the likes of Alphabet and AMD to watch out for later on in the session. Also, keep track of what's been happening with dollar yen. The reason I'm bringing this up is, remember, we have that snap election coming up this weekend. So the yen continues to weaken into that. We're down 0.3%. And, of course, traders are anticipating Takaishi to go on to win and consolidate gains. But again, another risk factor to watch over the course of the weekend. And then Brent just sitting shy of $68 here, 67.70. We're up 0.6%. And here, geopolitics is in focus. The fact that the U.S. shot down an Iranian drone yesterday, but then have signaled that negotiations are still continuing this weekend, perhaps alleviating some of the initial shock. But still, geopolitical premium being priced in to Brent this morning. Now, energy giant Equinor says fourth quarter profit fell 32% from a year earlier as oil prices dropped. The Norwegian company announced a share buyback of as much as $1.5 billion this year, despite adjusted operating income missing estimates. The Equinor CFO, Torgrim Reitan, joins me right now. Good morning to you, Torgrim. Let's just talk about your results, the fact that your adjusted operating income is just a smidge below estimates. But, of course, there is an impact on back of lower oil prices. The backdrop here, not so useful. How is the outlook going into 2026?
Thanks, Jumana, and good morning. Yes, I mean, last year was, a record year for us. We delivered record production. We grew it by 3.4%. And, we have never produced as much as we have done. And that goes in sort of Norway and also internationally back on new big assets coming on stream. So we'll continue to grow that in 2026 to another record. So I would say in the results that we are, delivering a strong result in a challenging market. Prices are down. But we have a $6 billion, income, $18 billion cash flow, and maybe most important, return on capital employed, key metrics, industry leading 14.5%. So that is sort of, a solid base to manage the current uncertainty, which is, significant. And then what we put forward this morning is a further strengthening of the company, taking down investments by 15% and reducing it by $4 billion over the next 2 years, and taking down cost, 10% as such. So clearly very important for us to be very well suited for what comes.
And you talk about the cash flow position. I just want to clarify something. Equinor also today announced a share buyback of up to $1.5 billion for 2026. That is substantially lower than the share buyback of last year, which was around $5 billion. The total payout last year was $9 billion. Why the drop in payouts if the company seems to be quite positive about the outlook for this year?
A very important point. We are coming out of a super cycle in natural gas prices, on the back of the Ukrainian war a few years back. So we have actually distributed $54 billion in capital distribution over these years. And last year was sort of the last year of re-levering the company back to a normal situation. So we decided that, all of this money, we should pay that back to our owners. So this is the first year where we are normalized, where we have to manage within our means, and this is sort of a normal level. We are coming off sort of a super cycle. So our capital distribution is a key part of what we do. We are growing the cash dividend by 5%. That is what I want my investors to think is bankable. And then we use share buyback on top of that to see to that we are competitive. So 1.5 is a lot, but we just need to remember we are coming off a super cycle, and this is the first normal year.
Okay, so for investors then, is it fair to assume that going forwards, these share buybacks will move to perhaps what you would describe as a more normal range versus what we were getting in prior years?
It is a normal part of our capital distribution policy, so my investors should expect that comes on a regular basis. So what we provide for this year is sort of based on the outlook for the next couple of years as such. So it's a natural part. It will be an important part of the totality.
So offshore wind developers, especially those in North America, have had a rough time recently, but the recent legal court cases have actually ruled in favor. I'm just wondering how the disruptions, again, the political discourse around the offshore farms in the U.S. has impacted your own business, and specifically your Empire business. What impact has it had?
Yeah, exactly. No, thank you. Yeah, I mean, we are developing a very significant offshore wind farm outside New York. It is, 60% complete. So this is at the outset, a very important development. Last year, we received 2 stop work orders from the federal government as such. In both cases, we have been able to continue the project. But we also, consider those stop work orders to be unlawful, maybe not the basis. This is a fully permitted project. Everything is okay, and we are well on the way. Our organization has been able to continue the project without delays, without cost overruns, despite all of this turmoil as such. So now we are full speed ahead. We have all the monopiles in the sea. And we are about to install sort of the nacelles and the blades out there. So clearly, we take it very seriously that there is uncertainty around this. We don't appreciate it because everything is in order. But clearly, we are ready to manage this, whatever comes.
Okay, let me bring you a macro question here. Gas trading on the continent has been quite jumpy, prices volatile. Again, you heard me talking about oil at the beginning of the show. And again, there's the expectation of a big supply glut coming this year. Just walk us through how you see the macro for both gas and oil this year.
Oh, yeah, perfect. So, I mean, we are a significant gas producer, both in the US and in Europe. In particular in Europe, we are the largest energy supplier to Europe. We have an all-in cost of $2 that we sell into, a $10 to $11 market. So that is hugely profitable. In the US, our cost is $1 selling into the market, also making significant flows. What we have seen in January with the winter storms just shows us the volatility in the market and what can happen if there is shortage of supply. So the winter storms in the US hit hard. We keep a certain part of our trading volumes exposed. So we were able to take a significant advantage of sort of the volatility. We received $60 per MBTU in the basin. And actually we have access to New York and our gas comes up at Penn Station. So we received $100 per MBTU, in the critical period as such. The same goes in Europe where we actually are able to take that. So I mean, in the short term, that sort of shortage can lead to things like that. We do believe that sort of over some time there is LNG coming into the market, and that will sort of create some softness. But we are very well prepared to deal with that, and there are many moving parts. On the oil side, clearly geopolitical tensions is really driving it. The underlying balance is a lower price than there is today. But with everything going on, it's very hard to say where this will end. Our job is to see to that we are super robust so we can deal with this uncertainty and make money in very low prices. So that's what we are here for.
Yeah. Sir, thank you so much for your time today. Torgrim Reitan, Chief Financial Officer at Equinor. But elsewhere in earnings, German chipmaker Infineon says it will ramp up spending on its technology for data centers, aiming to grow revenue as demand for artificial intelligence solutions picks up speed. Sven Schneider, CEO of Infineon, has been speaking to Bloomberg's Guy Johnson.
We came in slightly out of expectations, top line, bottom line. Now, for the full year, yes, as of today, we reiterate our full year guidance we have given in November, being moderate growth and also on the profitability level, high teens and low 40s. Given that the demand situation in certain end markets is improving, but given that there are still huge uncertainties, we believe it's the right balance and the right guidance as of today. Of course, you're asking, is there some conservatism in it? I would point out at the underlying automotive numbers we are taking for our guidance. They are a little bit below street expectations.
Okay, let's talk about where that uncertainty comes in. You talk about uncertainty. You talk about AI demand being very dynamic. Is that where the uncertainty is? Dynamic would seem to imply it's not very predictable.
Yeah, so if we take the company and put it's very simplistic into two parts, non-AI and AI. I would say on the non-AI side, we see, as I said, some pickup in demand. For example, in the 3 Cs, communications, compute. We see here that there is clearly the beginning of an upturn, whereas on automotive and industrial, these segments seem to have really achieved the trough and are beyond the trough, but the demand still has not really inflected. That's where we see the uncertainties. On the AI side, it is the opposite. The AI, which for us, just to repeat it, it's not the AI chips, it's powering AI from grid to core. That's where we see tremendous growth potential. It's going up quarter after quarter. It's for us the biggest growth driver in the history of the company. And that's why for this fiscal year, we are reiterating the 1.5 billion revenue number, which is double of last year. And we're even saying that for 27, we are again growing now from 1.5 to 2.5 billion because of this huge demand. And in order to do that, we are pulling in investments in our fab in Dresden, which we are going to open in summer. So that's a very positive development across the world.
You sound fairly confident on what that story is going to deliver for the business and the investment you're making around it. Others in the industry are voicing some caution. The TSMC CEO the other day saying what he sees in terms of the data center build out, the AI story, is making him, quote, nervous. How confident are you in what you see in terms of the AI demand picture?
Yeah, so this is a question, of course, we are getting very often. So fears about an AI bubble, as some people call it. Our view is we do not see that for the next years. Why? Because on the one hand, for us, and here we always need to look at the differences because we are talking about the power side and not the chips themselves. We are working together with a very broad international customer base of leading processor makers and hyperscalers. So very strong partners making lots of money with that business, with other business, so very profitable. It's not a niche business for them. It's the core technology platform they are developing. And very important other element is there is more and more also state support coming to the AI business, given that countries have declared that they want to become self-independent and self-sufficient on that area. So that's why we believe it's a very strong development, not only for 26, not 27, but for the next years.
Bloomberg's Guy Johnson speaking with the CFO of Infineon there, Sven Schneider. I also just want to bring you an update on Novo shares. They've fallen 15% on Tradegate versus the Copenhagen close. And of course, this is after yesterday they did warn that sales will fall by as much as 13% this year, with pressure from lower prices for their weight loss drugs contributing to the decline. The stock is down 40% almost over the course of the last year. Now, coming up, Donald Trump says talks with Iran are ongoing despite the U.S. shooting down an Iranian drone approaching an aircraft carrier. We'll bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories that we're following today. President Donald Trump has reiterated the U.S. and Iran are maintaining diplomatic talks. It comes after an earlier skirmish in the Arabian Sea spooked oil markets. The U.S. Central Command says a U.S. F-35C warplane shot down a drone that, quote, aggressively approached the USS Abraham Lincoln with unclear intent. President Trump confirming negotiations are continuing.
They are negotiating. They'd like to do something, and we'll see if something is going to be done. They had a chance to do something a while ago, and it didn't work out, and we did Midnight Hammer. I don't think they want that happening again, but they would like to negotiate. We are negotiating with them right now, yes.
The partial U.S. government shutdown has ended after President Trump signed a funding deal negotiated with Senate Democrats. The agreement extends Homeland Security funding through to February the 13th, while the rest of the government is funded through the fiscal year. Some conservatives backed the deal after pressure from Trump, while several Democrats opposed it over immigration concerns. Ukrainian President Volodymyr Zelensky is warning that Russia's resumption of attacks on the country's energy infrastructure will impact peace talks. Overnight, Russia staged its biggest assault this year with scores of missiles and hundreds of attack drones, ending a brief moratorium on strikes against infrastructure sought by President Trump ahead of talks later today. And London's Metropolitan Police has started a criminal probe into former Labour politician Peter Mandelson. The investigation is over alleged misconduct in public office after the UK government said it had referred communications between Mandelson and Jeffrey Epstein to the authorities. The probe follows Mandelson stepping down from the House of Lords yesterday. And a lot more coming up on the show. We're going to talk you through some of the key terminal charts of the day. Welcome back to Bloomberg Daybreak Europe. Well, a couple of charts that we're focused on today, particularly after that massive sell-off, the rout that we saw in software as a service stocks yesterday. And you can see here quite clearly from these charts that many of those companies that engage in the selling of the software as a service were down significantly. And that's actually been a theme since the beginning of this year, but dramatically so in the last 24 hours or so. So that is something that has emerged in the last 24 hours with Anthropic releasing a disruptive AI tool in legal space. Bitcoin also a focus. We spoke about it earlier on the show. We seem to be looking for support. Can't quite find it. 76,000 is where we're at, trading at the lowest level since the U.S. elections, despite the fact that the Trump administration has been quite pro-crypto and really supportive of the space. Despite that, we continue to see these cryptocurrencies, particularly Bitcoin, come under selling pressure. We are down almost 40% since the highs it reached back in December of 126,000. So that's Bitcoin. And then flipping over, of course, in this part of the world, I'm in Dubai, we're keeping a close eye on the tensions in the region, and not least because the U.S. Shot down the Iranian drone yesterday, but then also reiterated that they are going to proceed with the negotiations with Iran over this weekend. On the back of that, you saw freight costs shoot dramatically upwards. So this is the cost of operating a vessel through the Strait of Hormuz. No surprise there. Prices for that freight going through are moving higher because of the geopolitical concerns. Now, speaking of risk events that's coming up later today, we spoke about a lot of earnings over here in Europe. 10 a.m. UK, so keep an eye out for Euro area CPI. That's going to be key. Of course, we have the ECB coming up on Thursday. Don't forget that. At 3 p.m., ISM services in the U.S. We had the manufacturing numbers on Monday. They came through strong. And then, of course, the big U.S. tech earnings, Alphabet, one to watch out for, especially after yesterday's rout. Qualcomm and Chipspace and ARM reporting as well. So a lot going on there. And it is a big day for European earnings, too. We'll be hearing from top executives from the UBS, Carlsberg, Crédit Agricole, Santander, and Novo Nordisk. You don't want to miss any of those conversations. They are all coming up today. So many earnings and earnings conversations to get through. But the opening trade is coming up next. This is Bloomberg.